G'day everybody, hope all is well. Today I wanted to come through and cover something I think is really important, which is the difference between technical analysis and trading strategy. And the real reason is because I think a lot of people get it wrong. They think that a trading strategy is, say, a triangle breakout. It's not. That's just a bit of a technical analysis. That's combining two things. It's a flat level and a sloping level. Now for me, I want to explain to you what a plan looks like and what a strategy looks like as opposed to what technical analysis looks like and what it is. So look, we can focus on any of these charts really. Let's just focus on what we've got here. From my point of view, you need to have a sequence of events to occur. So when I go to the markets, I don't look for trades. I go to eliminate every chart that I've got. So you'll note here, here's my top 100. These are mostly Binance. Anything that's not listed in Binance, you'll see I'll have the next highest volume that's available there. Now, I also have that set up for my margin pairs. So these are all the margin options that I've got across the different accounts that I have, so I can scan through these. So again, it's about setting up the charts that I want to look at, that have the volume, that have the ability to margin trade, and that I like to work with, that have good chart structure, and then working back from there. So that's the first part of it. Now, when it comes to actually looking at or looking for a trade, looking at a trade, it comes down to a creation of something. So if I look at Bitcoin right now, I can tell you right now, there's nothing there. Okay. Technical analysis, schmalisis, malice, whatever. It doesn't matter. I don't care. What you will have, though, is I guarantee you, let me just, if I can remember how to draw. I'm going to do this. So people will be doing this, and they'll be doing this, and they'll be calling that a pennant. Now, naturally, one of two things are going to occur. This is going to keep on consolidating into here, or it's going to break out of there and possibly keep on consolidating, break out and move up, or break out and move down. But that doesn't make it a trading strategy. Many will have you believe that if you trade the break of that level, then that is the level that you should be trading. And that's okay. If that's the way you want to trade, hey, look, I'm not here to stop you. I'm here to fill out your understanding of what trading strategy actually is as opposed to technical analysis. This is a pennant. If that's what you want to subscribe to, then that's what it is. It's not something that I work to. Why? Because these levels are too subjective. If you note here, look how I've drawn those. I can move that down a little bit, and now I'm right. But it's just too subjective for me. Again, I'm not here to write you off if you use them. It's just not something, because I used to use them, right? I used them for a couple of years. It was the last thing I could actually let go of before I actually became consistently profitable. My mentor told me if you don't get rid of them, then I get rid of you. So naturally, I was forced to do so. So I use horizontal levels. Let's break down something that's actually got a bit of a trend here. Ooh. Actually, let's break down a recent trade. Where are we? Go to my watch list, Litecoin, Bitcoin. Have a look here. Okay, let me take you through. This is a Bitcoin breakout type chart. I'm not going to go through all the rules, obviously, but I'm going to show you about a complete strategy, how I bring things together. Now, most people can draw a line here and say, yep, Craig, that is support. Warranted, got it. Most people can also look at this and say there are lower highs, and despite the fact that some people might actually draw this in like this, it doesn't actually change the fact that that's a lower high, and then there's a potential lower high down here. So I'm going to get rid of that because they just annoy me. You look at this and you go, okay, so rule number one, let's say you've got to have 3 tests of a level of support before it's tradable. That's rule 1. Okay, 1, 2, 3. Of course, we've got another one over here and another one going back here, but we're focusing on the most recent time frame. Test 1, test 2, test 3. We've got to have convergence of our MACD, i.e. that MACD is at least flat. So if price is sideways, MACD is sideways. Better yet, if price is sideways, we want the MACD already down. So we want the MACD to be in agreement at a minimum. So that's called convergence. We want MACD to be convergent. Now, because we've got that flat level, we've got the convergent MACD here, we need to move to higher time frames. So let's say we need to have the next higher time frame in agreement of the trend, which is overwhelmingly, if it breaks, it'll be back in a downtrend. Why? Because there'll be a lower high and then a new lower low. So we need to have the 4 hour also in agreement in relation to that trend. The 8 hour, we want to have the same, and we can walk all the way to the daily and go, okay, well, look at this. If it does break that, this will be the new lower high, this will be the new lower low. That means the daily will also be in a downtrend. So we're using multiple time frame analysis with multiple technical ingredients to bring together a trade. Okay, so let's go back to the 2 hour. Why did it do that? TradingView is a bit of a pain. It does these funny things where it makes everything wonky. Then we go, okay, so we got price also back in that cradle zone, in and around that 10 and 20 period moving average. Another little reason. So it depends on, like, you don't have to have a heap of reasons. I like to have essential factors and bonus factors, right? Usually 8 or 9 essentials and then about the same for bonus. And the idea is that I go through the market, I know what I need to see. I'm not looking for a trade. I'm looking to eliminate as many as I possibly can, and whatever is left, I can actually take. Trading strategy is very different to technical analysis, because trading strategy, you need to have a number of events occur for a strategy to be effectively there, really. And a strategy will give you a precise entry, so as it breaks a support, a precise stop loss above the old lower high, okay? And then you can look at your targeting. It's about having a plan to bring to the market. That is just super, super important. If you don't have a plan to bring, you're going to end up flapping around like a turkey, and it's not going to help you long term. It also allows, when you take screenshots of your trades, when you get filled, take the screenshots of the 2 hour, if that was the time frame you entered, the 4, the 8, write a little blurb about why you took the trade. Did you tick the boxes for your rules? And what you can do is, when you've been taken out of the trade, profit or loss, doesn't matter, you can go back and you can analyze that position to see if you did stick by the rules that you set yourself. So guys, it's getting a bit long, this video now, but I wanted to teach you the difference again between technical analysis, and trading strategy. Have a great day. Some great shorts out there. Bye.